Hello traders, how are you? This is Trading Cyborg. I'm sending my love, sending joy, I'm sending peace, I'm sending all the positive vibrations to your way. As a trader, we need all those things because this field is not very easy. So, the topic of today is the fear factor in trading and how to remove that fear. So the fear factor in trading and then how to remove that fear. Okay, so picture this: you have done your analysis, the chart is perfect, the setup is textbook, that is the best test, this is the best setup. If you're using indicators, all the indicators align, the risk to reward ratio is very exceptional, but still when you're going to place your finger on the mouse, your finger begins hovering, your heart beats a little faster, your palms get slightly damp, and somewhere deep in your chest a voice whispers, what if I am wrong? Welcome to the most destructive force in trading. Not the markets, not the commissions, not even bad strategies, fear. So today traders, we are going to look and go deep, deeper than most trading courses would dare go. We are going to look at fear from the inside out, where it comes from, what it does to your brain, what decades of scientific research says about it, and most importantly, what you can do to trade with clarity and confidence every single day. So stay with me. By the end of the session, you will never see your own hesitation the same way again. So this is what we are covering. Where does fear come from? What it does to your brain, what research says about it, and how you can trade without fear. So the first section, we have to ask ourselves a simple question. So what is fear? So we shall start from the very beginning. So one thing I want you to understand, traders, is that fear is not a character flaw. It is not a sign of weakness. In fact, fear is a biological survival mechanism that has been wired into the human brain for over 200,000 years of evolution. Our ancestors needed fear because when a predator appeared, fear triggered a rapid psychological or physiological response, and the heart pumped faster. The blood moved to the muscles, and the brain narrowed its focus for immediate survival. So this is the famous fight or flight response, and it kept our species alive. Now, here is the problem. This is a problem now. The financial markets are not a predator. A red candle is not a lion. A stop loss hit is not a physical wound. Yet the brain, your ancient, powerful, beautifully irrational brain, cannot always tell the difference. So you have to understand that your own brain will not tell the difference whether you are in a survival mode or whether you are in a battlefield or whether you are in the jungle. It won't. When you see your position moving against you, when you watch a trade you did not take flight to the moon, when you are about to pull the trigger on a $10,000 position, your brain activates the same neural circuits it will use to escape a threat to your physical survival. And what is the result? You freeze because of the fear. You exit early. You do not enter at all. You chase trades after the setup has passed. You revenge trade. You overtrade. You abandon a perfectly good system. So these are the results. So we have said fear is a survival mechanism from over 200,000 years. And what are the results of fear? Freezing. So freezing is where you are so afraid you cannot get into a trade. You get out early. You don't get in at all. You chase trades after the setup has passed. You revenge trade. You overtrade. Imagine, this is just fear. You abandon a perfectly good system, especially when you lose. All these things which I have written here are all manifestations of fear, right? But remember, we said fear is just a survival mechanism. Now, these are the 4 phases of trading fear. So we are going to discuss the 4 phases of trading fear. So the 4 phases of trading fear. Number 1 is fear of losing money. This is the most obvious and the most common. The discomfort of a financial loss is psychologically more painful than the pleasure of an equivalent gain. So the thought of you losing is worse than the joy of you winning. Okay? This is not even an opinion. It is one of the most replicated findings in all behavioral economics. We'll come back to this shortly. Number 2 is a fear of missing out, or what we call FOMO. So FOMO is you watch a trade you skipped race upward, and the pain is so much, so you start chasing. You enter late at a poor price with no clear plan, driven purely by the terror of being left behind and losing out on a good trade. But FOMO is fear disguised as greed. Okay? Number 4 is fear of being wrong. By the way, this point is for if you are a very intelligent person, okay, or in your life you like to do things with perfection. This is going to affect you so much. It's called the fear of being wrong. And on a personal level, this has affected me so much, okay, until I decided to work on it and change it totally. So for many traders, especially high achievers, perfectionists, and people who tie their self-worth to their performance, being wrong in a trade feels like being wrong as a person. So you attach the losses to your identity. And this fear causes traders to hold losing trades for too long, because closing the trade means admitting a mistake, and you don't want to admit that mistake. Number 4 We have the fear of success. Trust me, this is also a fear in trading. So what is the fear of success? And this one is very surprising to many people, but it is very real. So some traders subconsciously sabotage their own winning trades. That is taking profits too early, second guessing winning positions, even deliberately breaking their rules because deep down they do not believe they deserve to win, or they are terrified. They are so terrified of the responsibility that comes with consistent profitability. Okay, so you fear success because you are afraid of the kind of discipline it will take you to keep on producing those same results. All right, now we enter section 2. So section 2, we are going to dive deeper into the neuro, and understanding this is what now we are going to help us transform ourselves. So neuroscience of fear. So at the center of your brain, okay, at the center of your brain, there is a small almond-shaped structure called the amygdala. So that the first thing we are discussing today is the amygdala. Amygdala. So this is usually your brain's alarm system. Okay. So at the center of your brain, we have the amygdala, and it is a threat detection center. It is constantly scanning your environment for danger, and when it detects a threat, it fires a signal so fast that it bypasses your rational thinking entirely. Neuroscientists call this the low road of fear processing. So this is, so when you encounter danger, so when you encounter danger, it fires so fast that it bypasses your rational thinking brain entirely. In practical terms, if you see a candle, or you see a candle which you are not anticipating, before you have consciously processed what is happening, your body is already in a mild state of alarm. Your cortisol levels rise and your decision making is compromised. So you're no longer thinking, you're reacting. So number 2, we discuss what we call cortisol, which I normally refer to as the trading poison. Okay. So when the amygdala fires, your adrenal glands release cortisol, or the stress hormone. So cortisol is the stress hormone. In short bursts, cortisol is useful. It sharpens focus, and prepares you for action. So it is not a bad hormone. But prolonged or repeated exposure to cortisol is devastating for traders. Research has shown that high cortisol levels cause traders to perceive risk as greater than it actually is. Imagine. So they reduce their ability to think probabilistically, and it increases impulsive decision making, and then it erodes the ability to follow a systematic plan. In fact, the London School of Economics researcher John Coates spent years studying traders on a real trading floor, measuring their hormone levels throughout the trading day. His finding, it is going to surprise you, that on high volatility days, the traders' cortisol levels went up by 68% within just a few hours. And when the cortisol was rising, trading performance deteriorated sharply. Not because the market was worse, but because the traders' brains were compromised. Okay? So, that is cortisol. We are still in the neuroscience of fear. Number 3, we have something called the laws aversion, or the two, sorry, the 2:1 rule. So let me explain. In the 1970s, psychologists Daniel Kahneman and Amos Tversky conducted a series of groundbreaking experiments that will eventually earn Daniel Kahneman's the Nobel Prize in Economics. The finding was elegant and disturbing in equal measure. So this guy won a Nobel Peace Prize in 1970. His name is Daniel Kahneman. And he found out that the psychological pain of losing a sum of money is appropriately twice as powerful as the pleasure of gaining the same amount. So in trading, this creates a little asymmetry. Now, because a $500 loss feels twice as bad as a $500 gain feels good. So the brain, trying to protect you, will do almost anything to avoid locking in that loss, including holding a loss for days or weeks, hoping it comes back. Long after any rational analysis says you should have exited. And by the way, you should not judge yourself, because this is not stupidity. This is your brain doing exactly what it was designed to do. Unfortunately, what keeps you safe in nature can bankrupt you in the markets. All right, so let us go to the third section. So if you are following so far, my name is the Trading Cyborg, and I've been in the markets for 6 years. And in those 6 years, I have learned things, and those things are what I'm trying to teach you. So the next subtopic is we have understood fear, in its form, where it comes from, how it operates. Now we want to see which groundbreaking studies changed everything for traders. So let us talk about science, because this is not theory. Decades of rigorous research have mapped trading psychology with extraordinary precision. And here are the most important studies every trader must know. Study 1. So we have to write that, study 1. the disposition effect. This one was done by a guy called Sheffrin and Statman, 1985. So Sheffrin and Statman analyzed thousands and thousands of brokerage accounts and discovered what they called the disposition effect, the powerful, consistent tendency for investors to sell winning positions too early and hold losing positions too long. Why? Because selling a winner locks in a confirmed gain, which feels good. But selling a loser confirms the loss, which the brain desperately wants to avoid. The result? Traders systematically cut their winners and ride their losers. And by the way, this is the exact opposite of what every profitable trader should be doing. Okay? Study 2. Fear eliminates IQ. This one was carried out by a guy called Amy Einstein. In 1998. Now, Mr. Einstein was a neuroscientist at Yale University. And at Yale University, Mr. Einstein demonstrated that even moderate levels of stress, the kind which is triggered by a losing trade, significantly impair the function of the prefrontal cortex. So what's the prefrontal cortex? The prefrontal cortex is a part of the brain which is responsible for rational decision, impulse control, and long-term planning. In plain language, what I'm telling you is, when you are afraid in a trade, your IQ effectively drops. You become less intelligent in the very moment you most need your intelligence. Number 3 is study 3. And this research was titled "The Lower Gambling Task," and it was done by Bechara. In 1994. So this one was carried out by the University of Iowa, and hence the name the Lower Gambling Task. So researchers at the University of Iowa designed an experiment where participants chose cards from the 4 decks. Okay, we have 4 decks. So participants are choosing cards from these 4 decks. Some advantageous and some disadvantageous. Over 100 trials, and what they discovered was very remarkable. Long before, listen to this very carefully, long before participants could consciously articulate which decks were good and which were bad, their bodies already knew. Their skin conductance measurements showed that their hands would sweat before choosing a bad deck, a subconscious fear signal. And the implication for trading is very profound. Our intuition and emotional intelligence can be valuable signals, but only if we learn to listen to them correctly, rather than having them hijacked by irrational fear. Now, this fourth study is going to be very funny for you. So it is called the testosterone and risk. It was carried out by a guy called John Quartz and Joe Herbert. Now, Building on his cortisol research, John Coates and Joe Herbert published findings in the Proceedings of the National Academy of Sciences showing that testosterone levels in male traders correlated strongly with morning trading profitability. So, high testosterone in the morning predicted higher afternoon risk taking. So, this led to the winner effect. A series of profitable trades could elevate testosterone, increasing confidence and healthy risk taking. But a series of losses would spike cortisol, degrading performance in a vicious downward spiral. So, all these studies are talking about fear. Okay? Now, we have learned studies which changed how we view fear. Now, section 4, which is the most important, is one of the most important, is how fear develops in a trader's journey. Even you, as a trader, know that on the first day you are trading, you are usually very confident. So, fear does not arrive fully formed on the first day. Okay? It grows, it develops, it feeds on experience, particularly painful experience. So, let me walk you through how this happens. Alright? So, how does fear develop in a trader's journey? So we have phase 1. So this is the beginner phase, where you have something called unconscious incompetence. Relax, let me explain. So when you first trading, you do not know what you do not know. Let me repeat that. When you first start trading, you do not know what you do not know. There is often a period of luck that feels like skill. In my period of luck, I managed to grow an account from 100 USD to around 800 USD before losing that amount completely. So, at this stage, losses do not yet carry emotional weight. They're just part of learning, and fear is minimal. Okay, so in this stage, fear is minimal. And the fear, we have said fear is minimal because the stakes feel low. And the lack of experience provides a kind of psychological insulation. But now we enter phase 2. Phase 2 is the first major loss. So when I lost that amount which I had grown for almost 1 month. I lost it in one day. That a trade that was supposed to work, that you are absolutely sure collapses. Maybe you even lose than you even planned. Imagine losing your whole account. Maybe you did not use a stop loss. Maybe you watched a significant portion of your account disappear over a few hours. Now, this is where your fear is born. The brain, which has been wired to avoid pain and to learn from danger, records this experience with extraordinary intensity. Neuroscientists call this fear conditioning, and it can persist for very many years. So this is where you get something called fear conditioning. Because of that first big loss. Okay? So now your fear is real. Now you can feel it. It's very active. So we go to phase 3, the overcorrection. Now, in this phase, the fear is active. You start to hesitate on trades. You move your stop losses. You take profits at the first sign of a gain. You are terrified of giving back any money. You second guess every entry. You start trading smaller and smaller until you are risking so little that even your winning trades are meaningless. This is phase 3. Then phase 4. It's called the paralysis. Now phase 4 is where many traders' journey ends in one or two ways. Either they become paralyzed, unable to execute their strategy, or they are trapped in a prison of analysis and hesitation, or they swing to the other extreme, desperate to prove themselves, to recoup losses, to feel the rush of winning again, and then they begin to overtrade, overleverage, and eventually they blow their account. Okay? So what you have to understand that both of these roads are paved with fear. The paralysis and the recklessness are mirror images of the same underlying terror, fear. Okay? But here is what I want you to understand above all else, my dear trader. This journey, this painful, this humbling, disorienting journey is not a sign that you are failing. It is a rite of passage. It is what every serious trader goes through, and there is a way through it. And that is why now we are entering to section 5. The remedies. What are the actual So how to eliminate trading fear? So dear traders, this is the most important part of this conversation, because it is not just understanding the problem but solving it. So I've curated the best strategies which I have used, and they are grounded in neuroscience and behavioral psychology and the practical experience of the world's most successful traders. Now, let's get straight into it. Number 1, which is remedy 1, is you have to define your risk before every trade. Okay? Traders, if you are listening to me up to this point, okay? The single most powerful thing you'll ever do to reduce your fear is to define exactly how much you're willing to lose before you enter any trade. Not after, not during, not before. Before, yes, before. So not after and not during the market, before. Because when the risk is predefined and small relative to your account, the trade becomes a business decision rather than an existential threat. Psychologists call this pre-commitment. So pre-commitment. That is making a calm decision in a rational state that will guide your behavior when the emotions are high. When you know your maximum loss is $200 on a $20,000 account, the fear of any single trade diminishes dramatically. You are no longer betting your survival. You are placing a calculated, bounded experiment. Right? Number 2, remedy 2. What we call process thinking. Thinking over outcome thinking. So traders, what you have to understand is that most fearful traders are obsessed with outcomes. Okay, so they are always asking themselves some foolish questions like, will this trade win? Will I make money today? Is this the wrong question? Is this the wrong trade? But what you don't know is that this is usually the wrong question. That is, will this trade win? Will I make money today? Because this is a direct path to fear. Allied traders think differently, and I am trying to turn you into an allied trader. They ask, did I follow my process? Did I enter according to my rules? Did I manage the trade correctly? Because these are the only questions that matter. Because these are the only things within your control. It doesn't matter whether you have traded for 20 years. The market will do what the market will do. But your process, your discipline belongs entirely to you. So when your identity is anchored to your process rather than your profit and loss, you become almost fear-proof, because a loss is no longer a failure to you. It is a correctly executed trade that did not go in your favor, and in a probabilistic game, that is simply part of the distribution. We have remedy 3. It goes straight to remedy 3. Now remedy 3 is you have to trade a strategy you have tested. Okay? Now one thing you have to understand is that fear thrives in uncertainty, and nothing creates more uncertainty than trading a strategy you do not believe in. If you have backtested your strategy across hundreds of trades, if you have seen its performance in different conditions, if you know its win rate, its average risk to reward, its maximum drawdown, then every single trade is just another data point in a proven series. And this understanding shrinks your fear dramatically. So number 1, for your strategy, you have to know your strategy's winning rate. You also have to know your strategy's average risk to reward. At least you should have an idea. You should understand your strategy's maximum drawdown, so that now every single trade you put on is just another data point in many trades you are taking. Okay? And by the way, if there is something you don't understand, let me tell you something. Traders who are always jumping from system to system, chasing the latest indicator or technique, are always trading from fear because they never accumulate the evidence they need to build genuine confidence in their approach. Alright? So we have remedy 4. So if you are not noting this down, just note down these things. Number 4 is journaling and emotional awareness. Okay? Now, one of the most scientifically supported tools for managing fear is a simple act of writing. Imagine! Research which has been carried out by the psychologist James Penbaker at the University of Texas demonstrated that expressing emotional experiences through writing reduces their psychological and physiological impact. The act of naming an emotion, labeling it, describing it, tracing it to its origin activates the prefrontal cortex and dampens the amygdala response. So from today, I want you to keep a trading journal, and it is not just your entries and exits. Okay? This is what I want you to also look. Now, I want you to note down also what did you feel before the trade? What did you feel during the trade? And what did you feel after the trade? So, number 1, what did you feel during the trade? Number 2, what did you feel after the trade? What triggered your fear? What story was your brain telling you? So those 4 questions. So when you externalize these dots on paper, they lose their power to control your behavior from the inside. Simple. Now remedy 5 is mindfulness and physiological regulation. Mindfulness So remember, before we have discussed the Harvard study that shows that mindfulness practice actually shrinks the amygdala, but you do not need an 8-week program to get immediate benefits. The simplest and most powerful tool which you can use to bring mindfulness is controlled breathing. Specifically a technique called box breathing. This is used by the Navy SEALs, the Navy SEALs, and elite athletes. Remember, you're also an elite athlete. To enter a state of calm, focus in high pressure situations. Now, what is the method? Number one, you inhale 4 counts. So 1, 2, 3, 4. So inhale 4 times and then hold 4 counts. Then exhale 4 counts. And then you hold again 4 counts. So what this does is that it activates your parasympathetic nervous system, the counterbalance to the fight or flight response. And when you measure yourself, you will see within minutes your cortisol, which is your stress hormone, is low. So repeat this before your trading session, and do this when you feel fear rising, and then do this after a loss to reset your state of mind before the next trade. Now we have remedy 6, and I hope you are following up to now. So remedy 6. So remedy 6 is what we call graduated exposure. So graduated exposure, this is how I'm going to explain it. So behavioral psychologists have long understood that the most effective way to reduce fear is not avoidance, it's graduated controlled exposure. If the fear of pulling the trigger on trades is your struggle, the solution is not to take more time of trading. It is to trade in a controlled, reduced stakes environment until your nervous system habituates to the stimulus. Start with a demo account. That is why I always tell my students or people who I am teaching that trade that demo account for even 6 months, even 1 year. Forget about what everyone is saying. Trade it for 1 year. Then move to micro lots. Then gradually increase your size as your emotional regulation improves. You are essentially retraining your amygdala, showing it again and again that the act of entering a trade does not result in catastrophic harm. Over time, the response diminishes. That is your response to taking trades, and the trigger to get out loses its power. Okay. Number 4 is remedy 7. So build a community and mentorship. If you're a trader, you know one thing, that trading can be extraordinarily isolating. And you know, isolation amplifies fear. So isolation amplifies fear. When you're alone with your screen and your losses, the fear has nowhere to go. It echoes and it grows. In fact, research has showed that social support reduces the subjective experience of threat, that is the fear of a failure, because having a mentor, someone who has walked through the fire of trading fear and come out of the other side, or a community of fellow traders who understand the psychological warfare of the markets, provides perspective, accountability, and the extraordinary comfort of knowing you are not alone. The greatest traders in the world are not solo cowboys. In fact, they were not trading alone. They are students of their own psychology, embedded in communities of continuous learning and shared experience. And this brings me to this other point, that If you would want, if you're listening to this and you would want a mentorship from Trading Cyborg, just shoot me a message. I'll leave my number or the way you can get me on the bio. Now we have come to the end of remedies. I hope you have noted these remedies. If not, rewind back, write those things down. Okay. There's the last one I wanted to add you. So this last one, it is remedy 8. So this is remedy 8. So remedy 8, we shall say reframe the meaning of losses. Okay. Now what do I mean? So every successful trader has had this shift in thinking, and it has been transformative, including me. A loss is not a punishment. A loss is not evidence that you're bad at trading. A loss is the cost of being in the game. It is a ticket price for access to the opportunities that will, over time, generate consistent returns. Think about any business in the world right now. A restaurant pays for ingredients on every dish, even the ones which get sent back. A pharmaceutical company funds dozens of failed drug trials for everyone that makes it into the market. Losses are not anomalies in a business model, they are built into it. So when you reframe your loss as a business expense rather than a personal failure, you remove the shame and the terror that make fear so debilitating. You are not failing, you are investing in the probability of long-term profitability. Okay? And so this brings me to section 6, the psychology of elite traders. So section 6. So let us talk about what the best traders in the world actually think and feel. Because if you imagine that top traders feel no fear, you are very wrong. The difference between an elite trader and an average trader is not the absence of fear, it is the relationship with fear. Now, Mark Douglas, one of the most respected trading psychologists who ever lived, spent decades studying this. In his masterwork, Trading in the Zone, he described what he called the 5 fundamental truths that elite traders internalize. First, number 1, anything can happen in the market at any time. Number 2, you do not need to know what happens next to make money. Okay? Number 3, there is a random distribution of wins and losses for any given set of variables that define an edge. Okay? Number 4, an edge is nothing more than an indication of a higher probability of one thing happening over another. Number 5, every moment in the market is unique. Now I want you to repeat these sayings every day, because when a true trader truly internalizes these truths, not just intellectually, not just cramming, but you understand what they mean on a gut level, fear changes its nature. It no longer stays, by the way, because you tell yourself this trade might go wrong and that will be terrible. Okay, before, your fear will tell you this trade might go wrong and that will be terrible. But now, after you internalize this, which we call the psychology of elite traders, it says this trade might go wrong and that is perfectly consistent with my edge, because my edge has a 60% win rate, my edge has a 50% win rate, my edge has a 20% win rate. My friends, that is not fearlessness, that is mastery. So the elite trader does not need certainty. They trade in the presence of uncertainty, comfortably, confidently, because they have done the work to know that their edge, applied consistently, will deliver results over time. Okay? Now, let us end by building section 7 So you are going to build your fear-free trading routine. Now in this framework, I will give you a nice framework on everything we have covered today, which will begin implementing from today. From today, when you watch this video, even if you watch this video 10 years from now, start implementing what you are listening, you are hearing right now. Okay? Number 1, morning. So number 1 is to prime your state before you trade. So before you open a single chart, take 10 minutes for yourself. Begin with box breathing, 4 cycles, what we have said. Follow with a brief review of your trading plan, your rules, your risk parameters, the setups you are looking for today. Write down how you are feeling. If you are stressed, tired, emotionally activated for any reason, acknowledge it. Consider whether today is a day to trade at full size, reduced size, or to observe. During the session, the pre-trade checklist. Before every single trade, run through a brief mental checklist. Does this setup meet all of my criteria? Have I defined my stop loss? Have I confirmed my position size is within my risk parameters? Am I entering from a calm, rational state, or am I chasing? If you cannot answer yes to the first 4 and no to the last, do not take the trade. Okay? Number 5. So number 3. During the trade, we have what we call the, so number 2, because so it is during the session. So number 3, which is during the trade, we have what we call the non-interference protocol. So once you're in a trade, it is your job to manage and not react emotionally. So number one is to set your alerts, to set your stop, and to step back. You have to understand that watching the candle tick by tick is one of the most reliable ways to activate your fear and override your own plan. So give the trade space to breathe. Then number four, after every session, you have to do something called debriefing. So debriefing is where you spend 15 minutes reviewing your session, not just the P&L or the profit and the loss. You also check your psychology. What did the fear tell you to do? So what did the fear tell you to do? Number two, did you listen? Number three, where did you follow your rules? Where did you break your rules? What pattern is emerging? So you see, this is something you have to start implementing right now across your journal entries over the past weeks. This daily debrief is what is going now to grow your development even further. Okay? Please, trading is a lot of work. It is not just pressing your mouse, buy and sell. There is a lot of which goes behind the scenes, and in this episode I have tried to explain to you what you should do to eliminate your fear, or to at least become a confident trader. Now as I close, we have been on this journey. We have been on a journey today. We started with that moment, the frozen finger, the racing heart, the whispered doubt. We traced the fear all the way back to its ancient origins in the human brain. We saw how it manifests in 4 specific forms in trading. We explored the neuroscience, the amygdala, the cortisol flood, the collapse of rational thoughts under stress. We looked at the research from Kahneman, from Statman, showing us how fear distorts our exits. And then we built a road through it. That is predefined risk, process thinking, back-tested strategies, journaling, breathing, graduated exposure, community, reframing a loss as a business cost. None of these are magic. None of them will make you fearless overnight. But when you apply this consistently with patience and self-compassion, they will transform your relationship with the markets and with yourself. Traders, the greatest traders I've ever studied share one thing in common. It is not their intelligence, it is not their systems, it is not their access to information, it is their willingness to sit with discomfort, to feel the fear, to acknowledge it, and to execute anyway. Not recklessly, not blindly, but with the quiet confidence that comes from preparation. From the quiet confidence that comes from self-knowledge and an unshakable belief in their own edge. So I'm inviting you today not to eliminate your fear, but to understand it so deeply, so intimately, that it will no longer have the power to make your decisions for you. So this is a Trading Cyborg, and if you liked what you heard, please subscribe. Now I'm going to attach all the key references for your perusal and for your further reading. Alright? So thank you. Let's meet in the next episode.